According to our next guest, there's a tale of two transport stocks. One looks like a train wreck and the other will drive higher. Chartmaster Carter Worth is over at the Plaza to break it down. Carter, what are you looking at?
Sure. So let's start with the index itself and then sort of work down. I got one I like, one I don't like. What's interesting, of course, is if you look back since the beginning of data in the 1920s, basically the equity market, as measured by the S&P, has almost doubled the transportation average. But if you were to start your meter from 1980, right around the Ronald Reagan recession, it's actually transports that have been the big winner, almost to the tune of double that of the S&P. Keep that in mind, and let's just look at a few long-term charts, a few short-term charts, and then drill down into two stocks. Here is the chart from 1980 in logarithmic scale, so it's not a parabolic, which means we can see the drawdowns in the early stage. And what we know, of course, is this is volatility at its very best. I mean, you can see the numbers here, down 34, down 28. This is every single drawdown greater than 25%. And some of them are doozies, down 40, down 47. There's a 50, there's a 61, of course, in 09. And this recent one is relatively modest in the context of some of the great drawdowns in a very cyclical index, a recession or not type index. Anyway, down 26%, and we're trying to get back to the high. What we do know, though, is that over the past 3 years, the S&P and the transports are virtually identical. A little more beta. You see that the blue line overshoots and undershoots, which would be assumed, but basically the same result. Now, the real issue is this. We know that the equity market itself is back at the former high, and this is a bit slumpish compared to the S&P. And ultimately, I do think that that is the risk, that we just never quite make new highs, and that you do have a fairly well-formed topping out formation after what was a very big break-in trend. And that's a tough spot to be in, having thrown back like that and then hitting your head. In any event, let us look at the following. So this is over the past year and a half. You've got a real winner, CSX, and you've got a loser, JB Hunt. In the middle is the transportation average itself. So let's drill down. And now, for what it's worth, this looks very self-dealing, as though I put this up here before, but I don't know what JB Hunt earnings were going to be, of course. Don't like it, and today's action will confirm that. What we have here is this. Yes, a well-defined downtrend line, and for the most part, it has failed, it has failed, it has failed at the line, and we know what's going to happen tomorrow. It turns out it's going to fail again. So it's a bad one, and I would stay away, and truckers in general are not particularly good, nor airlines. It's all about the rails, right? The rails have been the leader. It's a price-weighted index, and this has so many ways you can draw the lines. One way, of course, is this, a little bit like the market itself, a head and shoulders with a well-defined neckline. You also could have a bigger formation, which is something of a cup and handle. But it all points to breakout time. And what we do know, of course, that NSC and UNP have already done it. I think this is the one to be in, and JB Hunt, despite being down in the open, if you own it, just get out.
Carter, come on over. Evan will bring the chair over. Thank you, Evan.
Thank you, Evan.
So you mentioned NSC and UNP have already broken out. How does KSU look? And I'm asking in the context of if there are border issues, this one right. is one that's vulnerable.
So it's of the four big ones, right? It's the one that's lagged. It's got the Mexico exposure, and it has just now returned to its high. So its picture, if you will, is just like the S&P, sell-off recovery, whereas all the others have cleared their former highs. Ultimately, I think KSU is to be owned as well, but not as good as NSC, not as good as a CSX.
Big fan, as you know, of your work, Carter Braxton.
Oh, well, thank you
and
for that.
You also know, Chessie reports tomorrow after the close. You mentioned these double tops, basically 76.5, 77 last summer. We're trading there now. Would you rather, as a technician and trader, wait to see what they say tomorrow after the bell, try to buy the breakout, as opposed to trying to get in front of it during the day tomorrow?
Good technique, which in principle is safe technique, which is what money management really is about, is waiting. Right? Most hedge funds do that. They'd rather gross it up after an earnings beat. They'll rather miss the move in Disney and then get involved, because you risk the reciprocal, which is a miss and a drop in gap. Epic drop in gap often happens at tops, and then you've got that mess on your hands. So the prudent way to do it is to go after the results. It makes it even better. Even though you're paying up, it's a better business at that point. It's been validated. If you have a little bit of courage, of course, you go before.
Carter, weekly checkup on the S&P 500, the SPX. Now we're within, 1% of the prior all-time highs here. We had that 20% downdraft in the Q4. Now we're up, 23, 24% from the highs. We're going to make a new high. What provides the torque to meaningfully break out of what was maybe a double top prior?
Right, so I think it just gets down to the same old suspects, which is to say the super cap names, idiosyncratic growth names that are either going to push higher or not. So we've heard from the banks. There's nothing more to be said now. Goldman didn't do very well. JP Morgan did. It's off the table. Big industrials, they're not really working. Some are, some aren't. It's really about healthcare struggling. Utilities can't move the needle. REITs can't move it. It is going to be about the super cap names that have driven the market. We know it's been the circumstance for now almost 3 years. Top 5 stocks bigger than the bottom 250. So it's how Apple does. It's how Microsoft does. And they're all a little bit, in fact, we just heard about it from strategists, that they're all a little soft. They're all a little bit sort of lacking vigor.
All right. Carter, good to see you.
Thank you.
Carter Worth of Cornerstone Macro. I think Carter was actually referring to Dan's MAGA.
He was
just now.
Really?
I mean,
Carter's rarely lacking vigor, by the way, which is great. So quickly, if you look at the semis and if you look at the transports, they've been kind of the vehicles to ride on this way back. And frankly, as I would argue, at least until we see otherwise, these guys continue after a small pause today higher.